This week we focus on the banking sector, macro indicators turning red, the Fed decisions, and what all this means for crypto. Are banks having a Minsky moment? US banks currently have $200 billion in unrealized losses. Many are now changing their accountancy classifications from available for sale to held to maturity, so these mark-to-market losses do not alarm investors. Data on bank liabilities, in other words deposits, from the US Federal Reserve indicate a 4% decline since the beginning of this year. That may not sound like much, but this is the worst quarter-on-quarter decline since 1981. So which bank might be next to default? Those whose credit default swap has risen greater than 35 basis points in the last month, perhaps? It's hard to tell what will happen, but what we know for sure is that the banking crisis in the US is far from over, given the most recent price and credit default swap moves. Looking at macro indicators that are turning red, last week's GDP was a big miss at 1.1% versus expectations of 2%, mostly due to an inventory drawdown. That is, industries choosing to sell existing stock rather than make new items. US job openings data was the worst since the credit crisis, something the Fed watches very closely, and ISM manufacturing came in at 47, remaining in recessionary territory. We expect a continued deterioration in macro data in the US as harsh interest rates take their toll and stagflation, that is low growth and high inflation, pervades. The US Federal Reserve hiked rates on the 3rd of May by 25 basis points, which was widely expected. However, when asked why they thought a further 25 basis points was necessary, there was no convincing answer. The rhetoric was broadly dovish, while the futures market continues to expect almost 100 basis points of rate cuts by the end of this year, likely beginning in September. Meanwhile, the banking sector is in a calamitous situation and highlights the Fed has gone too far. What we are now witnessing is a policy error, which is likely to be supportive for Bitcoin as it is immutable and insulated from state control. Consequently, some investors are beginning to see it as a safe haven. While this is still an outlying view, there are an increasing number of our clients seeing it this way. What are we seeing in crypto? Crypto outflows have continued this week so far, so a third week of outflows is likely. The recent price drop in Bitcoin was a mirror image of the rally in the US dollar, and the US dollar rallied on the news of JP Morgan bailing out First Republic, so a relief rally, so to speak, although I don't think it deals with the underlying issues US banks still have. This is perhaps why we have again seen a quick recovery in Bitcoin prices. All the while, Bitcoin transactions have reached record highs due to the activity in ordinals, the Bitcoin quasi-equivalent of NFTs.